Hey, welcome to Bolshevik TV. Yep, we are watching your Reset Sniper channel, and we are going through our reset. The dominoes are falling slowly but surely, and yeah, we're taking a look. So this chap has asked me, why is there so much euro strength if it's on a sell-off? And this is the key problem that many people get that follow. You've got to take a trade early. You've got to take the trade early. This is your Euro USD. Actually, our chosen trade that we're going to be talking about is in fact the Euro Swiss Franc. It's the one we gave the most air to, but the Euro USD is also there for the taking and is a head and shoulders. And actually the dollar led for quite a long time, but it's going to always have these pullback. They're controlling the dollar. It's like a thermostat on who gets inflation. So when America is in the, oh, we've got too much inflation, losing credibility, they pump the dollar up. That culls the inflation. It takes the oil price down. It takes the gold price down. It takes the silver price down. It takes the Bitcoin and cryptos prices down. And it makes the, of course, makes the euro weaker. So America then passes the inflation bogeyman to Eurozone. As we predicted, Europe will be the highest developed nation. Note the word developed, it's not emerging. Places like Turkey will be the highest inflation places, and of course other emerging failure currencies. We've had them all before: Venezuela, Argentina, etc., the Zimbabwe's of this world. But the developed nation, the largest economic developed bloc, it's going to be the highest, and that's going to affect a huge number of people. It won't be the highest number of all nations, including emergings, but for a macro zone, the inflation is going to be extreme. We said this right from the beginning, that the weakness of the euro is going to export the inflation issue that has become a hot potato in America to the eurozone. And of course to the likes of Turkey and all the others. These are almost smaller microcosms, which will be more extreme, and go and ask about the inflation in Turkey. They want gold ounces, they want Bitcoin, they want dollars. They want dollar pricing. They're almost walking away from their own currency in many areas. But don't show up on a trade feed and say, oh my God, but the market is pumping. You're wrong. On the Euro USD trade. Please don't do that. It's naive. It's absolutely naive. The start of the trade was on the weak right shoulder where you took in an entry just on the takeout of the 18. And you could have had stops across the top there. You've got to improvise to get in. A super safe stop would have been at the top of the right shoulder. You should have been in before even what we call the traditional just-in-time entry for the head and shoulder to improvise. FX is volatile. They're not going to give it to you in a straight line. So to come up and say, oh, that trade that you gave isn't working, only the Euro Swiss Franc is to ignore the fact that you should already have taken all of these to this point. So if that's the level you're at now, you should be that far in money with a stop either there at the top of the right shoulder or an improvised stop where you took the short from there. If you're late, and for us, the just-in-time is the last opportunity. In essence, it's the last of them available. You should have been short from there. You could have improvised the stop at the top there, or you can still have a much bigger risk if you want to hold it there to keep you in the trade. Note already you would have had a rally back to the neckline, even if you'd got the last possible entry, what we would call the just-in-time. The first time you tested and played with the line was over there. You might have, if it touched it on the 17, got in there. You would have still seen the market retrace all the way back to there. That means you would have been short from there. You would have gone red for a while. So let's just illustrate that again. So that's your head and shoulders. Let's just be clear that everybody understands that, because I'm going to zoom in a little bit now on the triggering area zone. For your awareness on trading. By the way, don't forget to hit the puppy licks button. We are the only YouTube channel that has a licks button. It's misspelt, but it's a licks button, and you go up there and you hit the puppy licks. We like puppy licks to the face. if you're learning things. If you were given the trade early, you didn't get it as early as you might have if you were in the community, but we were already talking about this trade prior to the just-in-time on our free views on this channel, and also before the full triggering event on the Euro Swiss franc. Again, you would have got it earlier if you were in the premium community members area, and that's something you respect us for with the traditional means, which is becoming a member. However, nonetheless, you should still on a free view be significantly money even on the Euro USD. So when this triggering event was occurring, it depends which moment you choose. It could have been the touch there. Technically speaking, you could have been, and this is typical of price behavior, you could have maybe just got in there. You would have eaten red all the way, and at one point up there, you would have been in the red. 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 That's it. It's always at the beginning of a trade entry that you're at its most vulnerable. Those are the two pink icebergs of red pain for you. Everything that's below the waterline, which is the neckline, the blue waterline, is now a fish in water. You're not being held above the waterline. And even when it came up to surface with a very strong bar, many of you would have wanted to bottle it and pattern it out. Why? If you understand price behavior, post a triggering event, and this is at the just-in-time, the final entry for this trade. This does not include entries where you would have taken up top here and had your stop there, as is illustrated over here, as we were doing in our premium community, and we gave this trade to you as one that we expect to happen before it triggered. So you could have certainly been involved earlier, but nevertheless, let's stay with the waterline in blue there. You would not have broken surface even at its worst point apart from that tenuous early part of a trade. It's always like that, the early part. Once you get away, you must leave it and not touch it. But what would have happened here is you would have spent a certain amount of time in trade, you would have made some money, and you would have started to see it all washing out, and you would have had a really impulsive candle, and you would have bottled it and closed it for next to nothing on profit. That's what a newbie does. That's what intermediate traders without a trade plan do. You would have ignored the entire structure that set this up. That was a macro head and shoulder from, I don't know when. I'm going to have to go back and look for you when that first started its particular function. And then you would have watched it do all of this. And then you'll be that guy on Twitter that says, your Euro USD trade isn't working. Look how strong it is. It's gone from sub 112 to 1364. And that is absolutely typical. Some of your harshest rallies come in a major bear sell-off. You've already experienced that here. So if we go back here, you've already experienced that, a major spike candle right there that would have taken you from under 116, 115 nines all the way up almost to 117s. Now you're having a run from under 112s to 113s. Let's say it goes 114. You're significantly better off. You're forgetting that you've done this from your entry. And there's going to be a flight path. You have to understand with FX markets, they don't just let it go in a straight line. They're always trying to control. That's what Bolsheviks do. They want to control. Communism killed hundreds of millions of people. And they wish to seek to control this market, and a disorderly decline is not beneficial for them. So please understand, being early is important. Our premium community focuses and specializes in it. The link is below, themarketsniper.com. Book a chat. We'll check you're semi-sane and don't have fantasies. And if you're resourced sufficiently, you'll get an offer to join. Everybody pays the same. Or otherwise, watch the free view and take the just-in-time entries. And then you have a little bit less free space, and you get tested almost to going back, watching all your profits wash out, and you've got to be standing to the macro pattern, because then you don't get the capitulation phase. So a little bit about the mentality that's required to actually succeed. Showing up and saying that's too strong, your Euro USD trade is off, is foolish. We can absolutely be wrong. It can go all the way back up here and fail. It's still not the wrong call. There's a reversal here in play, and it's a probability-based setup. It's not an HVF, our core pattern, but it's a very significant that started from the neckline in 27th of July of 2020. This is already, by the time it triggered, if we say the triggering proper break was here, September, well over a year in gestation. That included the creation of a pandemic, a major QE by largely America, which killed its currency, that saw the euro initially climb like that, to the reversal that is now occurring with a shortage of dollars, Triffin dilemma, and Fiat, and all the other aspects. So Powell is due to speak. Guess what? He needs to talk like a dove now, because they started talking about taper. Dollar got too strong, spiller, thriller. It's always going to likely have some degree of reclaim. So let's do some other analysis for a bit of fun. And I've no idea what it's going to show. I'm freestyling this. I haven't planned it. You do a bit of fib there. You say, okay, that's our final right shoulder. That was roughly your neckline draw. Your 1.618 is going to be very, very closely confluencing with the target. That's 1 point of interest. You've also made one full unit from the shoulder down, projected down at this level. You see that hammer and then that rally, a little bit of a press on. So you'd made at least 1 unit further of the original right shoulder. This is your right shoulder over here, all the way to its lowest point, projected from your rally high, which was an ascending megaphone on a bear pole. That spells continuation. For us, we were not comfortable. No one's comfortable watching your P&L wash back out at this point. But once we saw that it was leaning on the basing ascending grind line, we expect continuation to the downside. You can learn all about megaphones, how they combine with bear and bull poles, what the ascending and descending element means, how we draw them, etc. Again, themarketsniper.com, book a chat. If you want to learn to do this for yourself, and then to practically implement it in a community, all doing the same thing so that you become a better trader and more self-independent, go ahead. But it's totally optional, of course. Don't forget our Odyssey channel for Reset Sniper on library. You will have both these videos and others that exist. So we've got a confluence at the head and shoulder. By the way, in terms of this overall move, because I want to get onto the Euro Swiss franc now, this is not your biggest time frame. I'm on the 12-hour. I've split a day in half. Don't forget, the Euro USD and the dollar index are very, very similar items. This is the same chart on the same time frame to the upside. You're having your first pullback after breaking out on your right shoulder here. Makes absolute sense. Powell due to speak. Expectation, he's going to be dovish and rein it back. But if the dollar corrects an immense amount with that expectation, and he's moderately dovish, but not as dovish as expected, you get a snapback rally. So the market is always second guessing what they think is going to happen, because these guys are manipulators of the currency. His statement is designed to have an FX effect, and the banking cartel will tell you how to respond to it. The same banking cartel, the primary dealer banking cartel that set up the Federal Reserve itself in 1913. In other words, the JP Morgan, the Goldman Sachs, all of the owners of these entities who control the degree of issuance of currency via their proxy, the Federal Reserve. If you don't understand that, then you don't understand that they're all working together, and they're already signaling to you he's going to be reining it back. Too much dollar strength, Too many people getting in on the trade. You're getting in late, you get washed. This is what happens. But longer run, this is the target on the dollar index, 99. And I'm saying that to you. I said it to you before this broke, that the first stop target of many. That's right. I'm saying there's more to come after 99 in spite of this throwing it down. This won't happen in a week. They aren't going to give you that straight line trade. Even this sell-off here on the inverted HVF had a strong period of weakness and then a major rally. If you'd showed up and said your Dixie short call is wrong, look at this rally, then you are not understanding pattern trading and how FX markets work. It's a substantial rally. Of course it is. In the business of going from there down to there, the bear call is correct. The bear call is 100% correct. These are markets. These are how they move. And that target was in fact made there. And this is all overperformance. And you could have closed down there. And the eventual low was almost a double bottom, not quite over here. And this coincided with the Bitcoin bull market, which is why as crypto commentators who understand FX markets and do technical analysis on the Dixie, because Bitcoin, Ethereum, any alt is invariably a long with a short being a fiat currency. Hence my videos on the bikes super emphasizing that rather than being short dollar, be short something like the lira, the rand, other emerging FX, lay off your dollar risk. By having a euro USD, you can put it on the euro, or even better, an emerging FX currency. We currently have a euro spell now, and it's incredibly liquid, and you don't pay a high carry cost. In fact, the interest rate differentials between euro land and the dollar is very, very close. While, of course, if you don't get your timing right on the lira, the cost of holding your hedge will be wrong. So we've given the lira as a failing currency many times, and you've seen it moonshoot. Is it an entry now? No, because your cost of carry and the fact that it's already had a moonshoot could see it congest for a while. So you can use FX to hedge your dollar risk of being strong when you are longing Bitcoin, gold, silver. If we take a look, and let's just take a segue here, because I'm going to come back to this chart. If we take a look and we see if we can get a gold Turkish lira chart up, for example, this is one of the trades you should have. Let's just see if we're going to get a decent chart out of this. So note how the minute you're taking a trade of this nature, you had this magnificent HVF here and a major blow off with overperformance and a very small period that's following the Turkish lira melt up and the smackdown. This is very easy trade to stay in. We've spoken about Bitcoin Korean won with the expectation that the Korean won will have a near halvening against the dollar. Bitcoin against the Turkish lira, gold against the Korean won. By the way, the won is actually a decent currency, but eventually, for whatever reason, it's probably going to have almost a halvening. But you can use Brazilian real, Indian rupee, depending if you're in those countries and you have better access to them. They're not so readily available on your broker platforms if you aren't. You can use the euro anywhere in the world. And here is why. Because the dollar gets stronger in fear. And it's a harder trade, BTC USD, than the BTC TRY. It's a harder trade, the gold USD, than the gold TRY, as you can see. Plus you get beautiful technical setups that are giving you the gain. And this absolute blow off, you will essentially have been in an unbelievable run. If you'd got in and around the 15,000, you would have almost seen 25,000 that topped at 24. Now, you don't always sell the perfect top, but you can get out now at 23,282 lira for a single ounce of gold. That is unbelievable good value. And how do you put on this trade if you aren't in Turkey? You put on the gold dollar and you put on the dollar try and you hedge out the dollar. This is the key point that we are attempting to make. And everyone's become crypto-centric and got off their global macro perches. And that's why when I appeared on Real Vision the last time, even though they wanted crypto-related content, I kept talking about the FX markets. Because it's not just about the one half of the trade, long Bitcoin, long Solana, long gold, long silver. It's not the best time to be short the dollar, guys. Here's the other half of the story. Be short the euro, be short the tri, be short something else. And hedging that out gives you additional alpha, more profits by having the two trades on. So every crypto trader needs to be an FX trader, ideally, for best outcome, and offsets the downside risk of the dollar strength days pulling your Bitcoin chart down, the dollar strength days pulling your gold chart down, because on the dollar strength days, your FX emerging is falling out of bed. And that bounces you back and cross covers. So you have reduced volatility in your P&L for having the second trade and increased alpha. Where is the downside? And this is because people don't understand when you long anti-fiats, it's a pairs trade. And nobody ever spends the other half any time looking on the other side of the door. You're short dollar. You don't want to be short dollar. Let me say it again. Long Bitcoin is short dollar. You don't want to be short dollar. Long, yes, you can make money, but you can make easier, better, more with less volatility. And volatility is what kills because you get shaken out. Anyway, so that point I've made countless times, but I haven't done it with a chart. There's your gold try as an example. What about Bitcoin? How bad was your journey for Bitcoin? Now, Bitcoin's been a bit choppy, as many people in crypto will have noticed recently, a bit of a pullback. I think it's going to firm up now slowly, but it's been a bit choppy. What about your BTC? Let's just do BTC try. You see that? Now that's a lot nicer chart than the Bitcoin dollar. And if you want to see the Bitcoin dollar, I'll put the Bitcoin dollar right under there for you. Bang. That's on the daily. And that's on the daily. Let's just get the same time frame in there. Roughly the same time frame, 2021 to 2021. Which part of this do you want? Over here, 20th of October was almost your best point. You made a marginally higher high, 20th of October. Let me stretch this one out a little more. There probably is a button for doing this. I'm damned if I know where it is. So there you go. That's how that's how BTC try treated you. At that relative high point, you went down most of it. You had a few seconds, a few days above your high, and then you spent largely underwater. So what am I showing you? I'm showing you your best point in October. November has been a poor month for Bitcoin, guys. Your best mid-October point there. That's the one moment you were better off at your high point on October. At your high point on October, same day, there, that's where you are today. Congratulations. You have just advanced your P&L to higher than the BTC USD trader, and you've reduced the volatility in your overall P&L. Reduced volatility, higher alpha. A lower return is expected. If you're in a lower volatility out there, it's less risky, there's less shake about, and you've got more profit. That is real alpha value. That versus that. And that's the difference between being short dollar and short lira when you're buying Bitcoin. Okay, so that point's made. Let's leave it there because I've hammered on this theme for so long, but so many people don't seem to get it and they don't do cross pairs. So going back to the dollar index, apart from the run to 99, taking you back up to our super macro. In fact, I think I need the daily chart for that one. This theme that I've told you about is going to be the economic theme of The Economist magazine, the Times magazine, how the dollar is killing the rest of the world and creating inflation for the rest of the world because petrol and oil and gas and everything is priced in dollars and the dollar's going up, and now the poor Europeans are having inflation, and now the poor Turkish are having inflation, and the South Africans will have inflation, and the Brazilians will have inflation, and all the FX emergings are failing and they're all having inflation, and now it's because of the mean old empire of dollar. That is what they're going to sell, and they're going to spin like absolute garbage Bolshevik propaganda to you. The truth of the matter is they've all printed too much. They're all in a debt experiment. They've done this intentionally. They've all universally decided to raise debt in dollars when they could have raised debt in their own currencies. And as a result, they're all lepers in a leper colony. And the biggest leper will live longer by a small amount, and that's the dollar, and we will have a blow-off period of strength. So after the 99, which is roughly here where we put the turning in, you'll probably have some easing for a while, and then we will be potentially in, we assume, on balance of probabilities, a sustained change in interest rate policy. Dollar weakened during this period, cheap dollar debt being raised, low interest rates, all into this period till the reversal that came in 14. That was accompanied by the first oil price, the second oil price crash from the 110 level during the possible war in Ukraine, etc., that saw it spill all the way down to below the subprime lows, to 25. At that period, the dollar was strengthening. You've got to understand FX markets to understand commodity markets, to understand crypto markets truly. And that's where people that model only on Bitcoin and its supply from fundamentals get part of the story. They get the drivers, if they do it correctly, on the Bitcoin long side, on the gold long side. Without FX analysis, you do not get the rest, and the other half of the pair matters. It's a bit like getting married to a lady and doing all your best to make a marriage could work. If it's not two tangoing and the other one's playing games behind your back like gangbusters, doesn't matter how good a guy you are or how good a girl you are. You need both to dance to get the trade you want. So in our future scenario cast, we actually see a guesstimated target of in and around 112 to 114-ish being met potentially. This could be a bit lower. It could be 111. Call it even as low as 110, which is a round number. But 110 to be made, anywhere in this range, 110 to 114. Once we see where this tops out and rests and how far it pulls back. And once, if that target is made, the inverted head and shoulder that we showed you in here, if it is made and there is a pullback, you will have a next stage dollar run. If you are long Bitcoin in that trade, you could find it hard work. It's far better to lay off your FX risk. Time for the Euro Swiss franc, which we really wanted to talk about. And by virtue of, they are gobbling euros right now, my good friends, at a rate that they don't feel comfortable with. Let me just assure you, the Swiss National Bank, without telling you, are gobbling euros. And there's a point where they won't be able to gobble anymore. And the euro is getting ready for its third smashdown, in our opinion, as we have said from the beginning. And this is probably one of your best trades, because when it goes, it's going to keep going. It's going to get disorderly. This market is more likely for the disorderliness because you're talking about a much smaller nation with a solid, relatively solid fiat currency. So we gave you this trade before this triggering event, and our community was aware of where I was getting short, and those that wish to take it are in and have been. And if you have a look at this, we're on a monthly chart. We are calling for the 71 to be run. We are calling for a spiller, a thriller, something like this. And the more the Swiss National Bank holds, the harder this will fall. in our opinion, and my assessment is they are liquidity providing without wanting to establish a floor. How did the floor work out for them? Not so great. Really expensive to put the box in the market and try hold back the tide. It was real expensive to put that box in the market to try hold back the tide, only to have that crash anyway. Eventually they walked from it. All those people that had the risk-free trade, because your honorable Bolshevik central banker of control bringing global communism to you was going to look after you and hold it. Your risk-free trade from a central banker with a forked tongue ended down here, entire accounts obliterated, even with light leverage. People aren't expecting that percentage of move. You could have had $1 million account and were trading just 1 or 2 contracts every time it got to 120 for a little bump to the upside. Your entire $1 million would have been cleaned and you could owe a whole bunch more. Why? Because the number of pips that represents, 4th decimal points is a pip when you fall from 120, and there is not a single, you need to cover your long, and there's not a single person that will buy your euro for anything right down to 85. And we battle with honest data here. The liquidity providers just backed off. They wouldn't buy your euro for us and give you a Swiss franc to cover your long euro Swiss franc. They wouldn't do it. Right down there. Eventually they started putting a bid in the market. So you may find each time is different. This was a long, protracted selling off period with many pushbacks, with the central banks jawing about how they were going to intervene. One of these days we were going to intervene. They were already intervening immensely at the 150. They have been, in my opinion, intervening, but they are not wanting to look like they're putting a floor. So I don't think it's going to represent the same floor break. It's going to be more representative, and this is associative thinking. It will be entirely its own sell-off event, but it will have more of the features of this, in my opinion, than this. Although I don't think you're going to get the same degree of rallies. People have seen this movie before. So it's going to be a hybrid of the absolute single day spike and the pushback, continual slipping through the floor. The skidding down with bounces along the way. And that's where we are. Let's show you that on the weekly time frame. So to be clear, you're watching a video from someone who has over 6 years, 3 times, 2009 called Euro Swiss franc to crash. At the end of the year, we went away in December. In 2015, December called it again, despite into the face of the Swiss National Bank asserting that the floor, they said peg, but it was a floor, was central to its policy and plans. We said there's even more reason they will lie to you to keep you in that trade. They don't work for you. They don't need you panicking before they've had a chance to shuffle the decks as they need to. And as a result of that, you had the biggest one-day smashdown experienced over the course of that period. I mean, wow, what a week that was. And that came January the 12th. The cusp of the year end, coming into the year end. And here you are now, starting December month of 2021, 6 years from the last fall, which was 6 years from the previous fall, all at the end of the year, December going Jan. You will be sleeping and eating your Christmas pud as a European, and you will get the biggest inflation headache that's ever coming your way if you have not hedged your euro risk. That is our opinion. And it is coming between now and the end of January, I expect. That is a very specific call. I'll say it again here on the 30th of November. I will repeat what I've said on previous YouTubes. I am saying there is a larger probability than anyone, 2 or 3 standard deviations of probability higher, which doesn't mean it absolutely happens, because the probability of a currency pair losing the better part of 25-30% plus is exceedingly low. But I will say this is 2 or 3 standard deviations higher. That it happens before the end of Q1 of next year, and even before the end of January next year. Obviously, by reducing the time frame, I reduce the odds even further that there is a major crash, and the parity will be run. The process will begin for this capitulation. The parity to be run and the downside move to be in an advanced stage. That doesn't mean target performance has occurred. Please recognize in the original of 2009 that the triggering event was the 14th of December. The final low actually occurred in August of that year. The final low. However, the target for the HVF was already made by June, but it's still 6 months later. I don't think it takes as long as that, but I don't think it's going to be as quick as this. We're not talking about a floor failure here. So the process has already begun. The target make and the absolute low will be during 2022. But you will get the headline before the headline. Let's have a look at this, how many weeks you've had. So in terms of the premium community, when we were putting this on, the media update I did for the guys was here, that run of that should be shorted with a stop there. That is why you see this risk reward there. The run of the low, stop here. So that is your triggering event in essence, the run of the low, sorry, there, roughly there. And this is how it's gone so far. On a weekly time frame, you haven't had a green week. There it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks since our premium call to be short Euro Swiss franc. It was given free view round about this before a triggering event. You still would have had 1, 2, 3, 4, 5, 6, 7, 8. You got the call 2 weeks later. You still would have had it before the just-in-time was triggered. And you would have had that number, 3, at least 7 weeks of green. And you are in a pound seat. This is progressing well. Has it gone into a capitulation stage? Can you get a green candle now that brings you some of the way back? Will that mean we are 100% wrong and we fail? Well, if you were to enter now and you were to eat red with a green candle that came like well past 106, that's going to be your problem for being late, not the problem with the call. At any point, some form of pullback. We will hear more. That as yet, the Swiss National Bank hasn't started squeaking. They will start squeaking and trying to cause bumps, and then they'll get the bankers to do a chase into the euro, and they'll do a bump. If everyone is crowded into the trade and getting late, they're going to try shake you out. They will do a charge. They'll gobble up some euros. They'll get their banker friends to cooperate for a short bit, and then they'll look to dump that same book on the rally. They will want to shake out the retail longs. But the tweets out of Bloomberg are now coming. Inflation in Euroland already. And that's the key point. Okay, so Euro Swiss franc is going fine. Euro USD is actually going fine despite a pullback. The expectation of Powell is dovishness. What could in fact happen is they pre-trading that on this rally as dovishness, and that once he speaks, it's now fact. In fact, you turn over. Unless he's exceptionally dovish and really surprises the market by going beyond expectation, this pullback could end and you could start to have it. When does he talk? We need to check that. You go to Forex Factory for the news and the dates on Powell. Fed Chairman Powell testifies 5 o'clock today. He gets such a free magic carpet ride from most politicians. Oh, we'd just like to thank the Chairman Powell for giving us of his time, and what does he think about the difference in wealth? Lots of softball, lob him a little easy, hit the ball out the park pitch. And so few people that just actually truly take the cartel on for the absolute skullduggery and patent manipulation of walking this game of inflation, deflation, fear, passing the inflation stick to other currencies, trying to cap the oil price and pumping the dollar. They've got such a difficult path to walk that you're going to continually flex between inflation, then fear-related deflation, which is usually going to be around the health theme. They might create some war themes, I don't know, but that's not good for the dollar, the oil price, which they're trying to contain. The oil will go higher, the agris will go higher, there's too much money being printed. The overall underlying theme is, as we've always said, inflationary, and they will create deflationary reactions to try contain it, curtail demand and block supply chains, so that people A, buy less, and B, that which they buy takes a while to come through, which is killing the scale. We are shrinking the global economy's economic activity as a deflationary event to try offset all the printing that has been done, which is hyperinflationary. And that's their great game. And he talks today, so we know. Tuesday, the 30th of November, and you'll see the reaction. Expected to be skittish. Things could change on this rally. And if you want to trade Euro USD and only get short down here, just 2 days before Powell talks, and you face a push-up, then you don't understand markets. And you got to take early entries. The biggest bugbear of technical analysis that I've perpetually hated, that was the theme, and we await further confirmation. This is prudent. It sounds like an accountant. I will await further confirmation. I will sit on my jacksie with my finger up my backside, waiting for better days. The risk-reward ratios are destroyed by people who await further confirmation, by lagging moving averages that will take 20 times longer because they're 21-day moving averages, to eventually create a crossover so that you've waited for the signal and been given permission by a random mathematical lagging line to do what you suspected was going to happen, which has now destroyed your risk reward, which now sees you only shorting down here the Euro USD and being currently underwater on a major pump pullback. Some of the harshest pullbacks are in pullbacks to the upside in bear trends. And they will fizzle quickly as well, as you've seen on that candle. They can be knocked, and we will hear today. If Powell really does super dovish and it surprises everyone, it can continue quite a bit higher. But the eventual goal on balance of probabilities for us is the running of 110, which will represent the 99 run on the dollar index. And after a rest, we go higher on the dollar index and lower on the Euro USD, which could indeed mean at 110, 111, you start to approach the parity levels. The takeout of the highs here, which are lows obviously on the Euro USD, we will start to approach a very, very dangerous point. I'd like to get what the dollar index value is on a Euro USD being parity. We'll check technically on that. Okay, so that's your update on how not to trade Euro USD short. Our expectations, the euro is a macro sell. FX emergings are generally a macro sell. Who will be your next FX emerging to best lay off? You can get more details as we do that deep dive in our premium community, themarketsniper.com below. Hedge off your anti-fiat longs against dollar strength when you have the opportunity with a suitable FX emerging, or even the euro if you have no better options. Okay, thanks for watching, and we'll catch you later. We'll see you. Don't forget to subscribe to our Odyssey channel. YouTube doesn't allow us to speak freely. We are on Odyssey. These videos will be on Odyssey as well. And our reset videos are the only ones that require a small library coin contribution. Otherwise, they're entirely free. We'll catch you there. Thank you for puppy licks and smears all over your Facebook place. Bye for now.